Well, let's take a little bit more of a deep dive in terms of some of those movers that we are watching. Chris Conway from the Australian Stock Report is joining me live from our Melbourne studio. Chris, great to have you with us. Now, of course, as mentioned, as you will have just heard, that Costa Group on the best performers list, shares higher by 10%, hitting a record high, in fact, off the back of that first half profit. So certainly a stellar number coming through.
Good afternoon, Natalie. Yes, I couldn't agree more. There was really not anything to fault in Costa's numbers. Revenues were up 10%, profit was up fourfold, but that was due to a one-off item, a revaluation of one of their business units. And they increased their dividend, and as well as that, they increased their guidance, their outlook from 20% growth in the back half of this year out to 25%. So, as I said, really nothing to fault. It was a little bit surprising, I think, to see that the stock had been sold down prior to results. And, of course, you know, getting a sort of 10% pop on the open this morning.
Of course, in terms of it's that outlook moving forwards, it's talking about the full year earnings pretty heavily weighted to the second half, looking at avocado harvest, a move. We had Junbei Liu from Tribeca Investments a little bit earlier telling Sky News Business that, you know, this might be a difficult stock to jump into today. Would you agree?
Yeah, I would think so, just simply because it is such a big move today. I would certainly be happy to buy it on a pullback, though. You know, again, just looking at the history of Costa over the last sort of 12 to 24 months, it has had those moments where it's pulled back, and again, most recently was just before today, really, which would have provided you an opportunity to buy in what remains an overarching bullish trend on the stock in terms of price action, but also through an upgrade cycle as well. And that's one of the things we look at very closely at Australian Stock Report. We have a model that actually looks for what I was just talking about, you know, strong price trend through an upgrade cycle, but have just been sold off very recently, and we're looking to capture, you know, some price weakness whilst the fundamentals, the underlying fundamentals, are still moving in the right direction.
Of course, incredible moves coming through when it comes to Iluka Resources. We have, in fact, seen the company trimming its full-year net loss by nearly a quarter, $171.6 million. Shares flirting, in fact, with four-year highs. So strength coming through very much for Iluka. In fact, we spoke with the CEO a little bit earlier, and he was talking to that higher prices and also higher volumes.
Yeah, so Iluka, a good set of numbers today. I mean, obviously there was a loss, but that was due to some impairment charges that they had flagged previously. The big grower was revenue, and that's on the back of stronger commodity prices. Iluka is a little bit behind some of the other miners. So, you know, over the last 2 years, miners have really tidied up their operations, cut down on costs, and then they've enjoyed the benefit of increasing commodity prices. Iluka is just sort of starting to realise that more now, and that's not a bad thing. It means that there's probably still some further upside to go. But today's results, I really think, reflect the fact that operationally they have been good, they have increased their production, and of course they've been able to therefore take advantage of the higher commodity prices, which has led to the good results today.
Of course, that said, in terms of what we're seeing in the broader market, it is those LNG players who are certainly being punished when it comes to today's trade. What are you seeing more broadly when it comes to market action today?
So, look, I'm really focused on what Jay Powell's going to say tonight, and I think everyone is. That's no surprise. So, you know, to put our local market into context, we have had a pretty good reporting season. I think one that was better than expected. You know, of the 90% or so of companies that have reported, I think it's 70% have met or beat expectations. That's better than average. And typically what has happened previously is that expectations have been really high and they've sort of had to have been pared back as the results didn't meet the expectations. But this time around, they have sort of met expectations and the outlook is good as well. So just putting that to one side, I think the bigger thing, and this is a conversation that, you know, we have been having for an extended period of time, and we are going to have for a long time into the future, it's all about the Fed. You know, how fast they're going to raise rates. And just to provide, you know, a little bit of a history lesson, this shouldn't come as a surprise, Nelly, I'm sure you know this anyway, but every time we've had a bubble that's led to a recession, an accommodative monetary policy has been in place prior to those bubbles and those broader economic downturns. And of course, we have an accommodative monetary policy now, and the Fed is fighting that battle between raising rates fast enough so that they prevent the US economy from boiling over, which of course the casualty there would be the stock market. But if they don't raise fast enough and this bubble is allowed to continue and ultimately it bursts, then it could sink the entire economy. So, look, I don't think we'll get too much out of Jay Powell tonight. I think he's probably likely to stick to the script. But it is, as I said, the conversation we'll be having for the next at least 12 months, I would have thought.
If we do see that boil over in the US economy, I mean, which areas of the market here at home do you think would be the key casualties?
All of them. All of them. You know, as I said, if the US economy boils over and they don't manage the bubble lower now and it bursts, well, that's when it's more likely to spread to the broader economy. So when did we see it? We saw it in 1990 with the dot-com bubble, the recession that followed. We saw it most recently during the GFC, and of course the big one was the Great Depression. The one where it didn't happen, where a stock market bubble didn't lead to an economic downturn, was 87. The 87 crash was actually confined to the stock market, and the US economy kept on going pretty strong. But if it does burst and you know, global markets go into meltdown, then there's no sector here that will be spared, I wouldn't have thought. And the other thing that will probably get caught up in it is Australian house prices as well, because you know there's plenty of evidence there to suggest that that is an inflated bubble as well.
Of course. Just in terms of, I guess, one of the lighter stories that we're looking at when it comes to Bingo Industries. And I have to admit, this was one that I really had to take a bit more of a look at today. It wasn't a name I was familiar with, but certainly one that plenty of the analysts that we speak to here on Sky News Business are watching and liking at the moment. Now, important to note that we did, in fact, speak with the CEO off the back of that first half result, which did come in largely in line with market consensus. Saw revenue up 43% to $142.4 million. Here's what he had to say on the numbers.
The biggest thing that we're doing in the industry right now is changing the way we're doing things for the market. So we're really focused on customer service. And to increase our network capacity, we've acquired quite a few sites in the last 6 to 12 months, and we've got a $200 million CapEx redevelopment program that's going to increase our network capacity from 1.7 million tonnes to 3.4 million in the next 18 months. So now we're the largest B&D collections and post-collections recycling company in Victoria. We've got a strong integration plan currently underway, and we have a 2-year plan to be the dominant recycling company and waste provider in Victoria.
So that was the Bingo Industries CEO speaking a little bit earlier with Leanne Jones. Chris, coming to you on this one, in terms of reaffirming its FY18 earnings guidance, seeing approximately $93 million, again, also in line with expectations. So far, we're seeing Bingo Industries, you know, continuing to tick those boxes.
I would certainly agree, Nellie. You know, this is one that our longer-term fundamental guys at Australian Stock Report have liked for quite some time. Obviously, it's a roll-up, as the CEO mentioned in the clip there. They have been acquiring businesses, and they're looking to build their market share, and they have done that pretty effectively to this point. I think one thing that a few analysts, at least that I've heard on the show earlier today, are concerned about is the increasing regulation in the industry around recycling. You know, this is government regulation around recycling and waste disposal that's going to lead to increased costs. And a lot of analysts have been viewing that as a negative. We actually view that as a positive, because they're now one of the stronger players in the industry. Those rising costs will flow across all businesses, whether they be big or small. So the smaller players that Bingo has been acquiring and probably will be looking to acquire in the future, they're the ones likely to be stressed the most by those increased costs. Now, as we all know, the big players survive and then they pass on those costs to consumers. And this is not an escapable cost, because at the end of the day, waste disposal is something that needs to occur. We know that in New South Wales, landfills are near capacity, and one of the reasons for this increased regulation is because New South Wales has actually been transporting a lot of waste across to Queensland to dump it in sites in Queensland. But bottom line, as I said, we view that as a positive, because we think it will allow Bingo to pick up some of these smaller players and further increase their market share as those businesses come under stress from rising costs.
Okay, Chris, we'll let you get back to it. Great to have your insights with us. Thank you.
Thanks, Natalie.